What's good, everybody? This is your boy Fabian coming back at you with another update of the 1K to 100K challenge. We have just completed week 4, but we also have completed our first month. But before we go any further, man, I need you to like, subscribe, and share this out to anybody that wants to follow the journey, man. 1K to 100K. Just completed week 4, just completed our first month, the month of January. And we're going to go ahead and go over the results of what happened this week and a recap of the month and what stocks I'll be looking at for future endeavors. And I'll go over a few that I traded this month. As you can see, the account is way down. I got slaughtered this week. Slaughtered. No excuses. It's right there in front of you right now. The account value, $364.32. Only $160.32 cash available. Your boy got some work to do. We started out good for the month, man. I mean, the month was going great. Patience, discipline, and pacing ourselves is ultimately what kept me in the game. But this last week, got a little sloppy, got a little greedy, and there was some news that affected things too. But, you know, once I heard the news, I should have reacted a little faster and better than I did. Hence, this is where we are now. So go ahead and do a little quick recap, man. Then we'll go over a few of the stocks. Typically, COF, Capital One. Remember, I was in that. I got slaughtered on that. CRML, that was my money maker. That's what was keeping the account afloat. I got slaughtered on that. And then I was closing out some small ones that just wasn't doing anything. You know, the stock price was moving, so that lets me know I kind of got into a trade with a bad volatility index because it wasn't gaining any momentum. The stock price was moving, but my premium was staying there. So I cut the Walmart play that I had. What else did I do? I had an IWM that wasn't doing anything either. Keep in mind, they were small plays because, you know, didn't have much money. So if I could get a little bit here and a little bit there, but those plays just wasn't popping. All right, so once again, account 364.32, only $160.32 cash on hand. This is a breakdown of the month. Like I said, week 4, this is our results. Week 3 was at $968.73. We had $470 of cash on hand. Week 2, we was at $1091 value. We had $696 cash on hand. And our first week, man, was $1088 in value, and we had $696 cash on hand. So as you can see, we started out great. We maintained balance. We had a steady pace going. We had discipline going. And when I say discipline, I'm talking about the account allocation. As you can see, I blew that out the water at the end of the week because I started getting desperate. So got to go back in, dial those emotions in, man. You got to get those emotions in check, man. Sometimes that happens when you're in the heat of battle and you're on the battlefield. That adrenaline rush. And that was that last week, man. You know, I'm trying to, you know, squeeze all I can out of the lemon, you know. At the end of the day, between the news and the plays not moving like I needed them to move, these are the results. And also, we didn't get what we was looking for on SoFi. They hurt me bad on SoFi. SoFi really hurt my feelings on that one. But hey, the month is over. The week is over. We'll finish this recap. We're going to get back in the lab, get back in the booth, continue to look for some high probability setups and make sure we execute those high probability setups to get this account back on track. It's just the first month, first quarter. Football has 4 quarters. Just the first quarter. We're going to get there. All right, without further ado, man, let's go ahead and get into our first stock. We'll go ahead and do a COF, Capital One. I was in that play. I ended up cutting it at a loss. And from that point, that's when the account really started dwindling down after cutting Capital One at a loss. All right, so this right here is Capital One right here. Currently looking at the daily. I always like to go back to why I initially got into a play. And I initially got into Capital One because of this double bottom, here, and then the breakout. So we got that breakout, boom. We came back down, we pulled all the way down here, caught that bounce, and that's why I initially got in on my first play. Just a recap of the month of what happened with this stock, because I played it 2 or 3 times. Got that bounce there, made it all the way up here, took profit. It came down, I got back in. It came up here, took profit, and then I got back in again when it came down. But this past week, the last time I was in, I saw that it broke structure. And if you can't see it here, you can always pull up your line graph and give you a better picture. So I got my lines here drawn on the swing lows. So this was a low, lower low, lower low, lower low. So when price came down and broke this low, we had broke structure. But I kind of ignored it, looking for price to go back up, but it never did come back up and break structure. Typically, I'll let it break structure twice, and then I see that it's going, especially if I'm in a call, I see that it's going to the downside from there for sure, and I go ahead and cut the play. But I actually didn't end up cutting this play until it broke this structure here. So I was definitely at a loss right there. So I ended up cutting Capital One after it ended up breaking structure 3 times at a loss. I think I was, that kind of hurt me there. Went ahead and put that money back in the piggy bank to try to use on another play. But yeah, that's why we end up cutting Capital One, COF, because they end up breaking that structure. Now let's turn the candles back on. Like I say, if you ever can't see the breaker structure, man, just pull those line charts up, and it'll give you a better visual. Then you can go back to your candles. But yep, just give me y'all a snapshot of why I cut the play. All right, let's move on to the next one here. Let's do critical metals, CRML. Now this stock right here, it did me pretty good for the month, for 2 weeks at least. I played it 3 or 4 times, and that's what was helping build liquidity in the account, these precious metals. Right now, you're looking at the 15-minute time frame. So let's blow this thing out to the daily at least. Just kind of give us a snapshot. Now, I will admit, once again, discipline and rules. I did not follow rules when I was playing CRML. One, critical metals was hot. Trump news was spiking the move on the stock because they was government backed. And I wasn't looking at the bigger picture. I pretty much was trading this thing on the 15-minute. That's why I was making all my moves. What did I trade at? No, I traded here. I traded here, let it come back down, and I got in and traded here. And then I end up getting in again, which is where I lost. But I had two big plays where we got some significant returns based off the 15-minute candle moves. And then I got in again, and that's where we are right now, way down. But once again, this is the 15-minute time frame, and I didn't practice my rules and discipline. I never even blew this thing out. So even on the 15-minute, if you blow it out, you can see what structure. So even right here, like say I was in the play here, and then Trump gave some news about he's not gonna meet a cap on investing money into critical metals, and the stock took a dip, and that was for that evening. So I sat in it. Then the next day, market open, gap down. I was cooked after that. But yeah, if you just look at this structure right here, it broke, but it did come back up, and we got a high. But then that news knocked it back down here, and we traded sideways at that structure. So you could have looked at it that day and said, okay, we'll bounce next day. But then next day, boom, gap down. Like I said, I was cooked from that point. So yeah, just blowing it out. Now, if I pull it up on the daily, same thing. If you can't see breaker structure here, just pull up your line chart, see? Broke structure on the bigger time frame. So if I pulled up the bigger time frame like I'm supposed to, because all the smaller time frames do make the move to get to the bigger time frames. Just a whole bunch of noise inside to ultimately do what the bigger time frame wants to do. Like I said, I ignored that on CRML, and I'm biting the bullet for it now. But hey, I'm gonna get back on track. We're gonna get this thing going. Hindsight 2020. But yep. And I end up not cutting this play. One, I'm trying to trade while I'm at work. No excuse, but wasn't able to watch it like I wanted to. Just going in and out, and just end up not cutting that one like I did Capital One. I was able to cut that one. Pretty much just watch this one fall to the wayside. But we are here. I do have time on the play, so we'll see what it does Monday when the market opens, starting a new week and a new month. My upside, I get much, but I could get some more liquidity back from my losses. So we'll see. So I hadn't cut it yet. Pretty much at the bottom of this trend here. If we go any lower, this thing is going to be free. All right, so that's it for critical medical. I keep messing that word up. So that's it for CRML. All right, let's take a look at SoFi real quick. They had earnings Friday morning, blew it out the water. Guidance was good, beats across the board. But lo and behold, the market did not reward the stock. Well, SoFi was my original first play into getting this account going. So we started off at the beginning of the week. We got some upside, got some range up and down between 27 and 26. It was green for a minute. And after that, it just started pulling back. Everybody just started waiting on earnings. It started ranging. And here where we are now. So y'all remember I started this play originally. It was a trend line here, looking for that bounce up, but it ended up breaking the trend line. But We was looking for a break to the upside, $2 move up after earnings, or like I said, $2 move down. So we weren't going to disregard the fact that this could not happen. And lo and behold, it did happen. But this is all because of sell-offs. Didn't really have anything to do with the setup or the pattern. When earnings involved, things can go either way. Just depends on how the market looks. So unfortunately, didn't go our way there. And boom, nice big red candle for Friday. End of week close, end of month close. So right now it closed at 22.81. As you can see, this pattern is null and void at this point. So now just looking to see where price can go. Once again, SoFi, basically the first play of the account. Should have been a nice big setup and should have been a big win. Everything was looking good when I jumped in, but things happen, things change. We're going to move on. But right now, I got support at 1987. So started the month, started the new week next week, started the new month next month, February. I will still continue to see some downside here, at least 1987. Not saying that we'll get that far, but I like the this range here based off that candle there. So price action fall anywhere in this box right here. We should look for a bounce, or once again, we can get in this box here, being that it's February, have a little ranging from week to week, day to day, and then we might start getting back some upside here. Anything is possible right now. Just got to wait to see what the market wants to do for February and how price action is going to take place. Put a fib on it, my swing high, my swing low. All right, so the fib, target 1, 21.20, target 2, 17.82. Once again, anything's possible. I don't think we'll get down to 17.82. Definitely can hit that 21.20 and get a bounce there. So I'm going to end up keeping my fib up next week, monitoring to see if we get that bounce, or do we push lower towards my base level, 1987. But that's what we're looking at for SoFi, man. Once again, stellar earnings. Everything was good. Just happened to be earnings. Just happened to be Friday. Just happened to be in the month. Everybody taking profit. So I get it. Once again, didn't catch that piece, the way everything aligned. That was basically alignment right there. So it could go either way. But at the end of the day, people want to go ahead and take profit and start fresh. I get it. I was on the wrong side of the trade. But once again, we're going to see what next month brings, next week brings, and see if we can get a reversal sometime soon with SoFi coming in this area here. That'll be it for the account challenge, but I will definitely open a new position in one of my other accounts for SoFi, because I definitely love the stock. Great, huge potential to the upside. But yeah, that's it for SoFi, man. Let's move to the next one. Let's look at my man Walmart. So Walmart right now, I'm looking at the weekly. And y'all remember on previous videos, Walmart, I said we got a head and shoulders forming. So right now, this is the weekly. We still got that left shoulder going. And right now, this is playing out just like I want it to. This candle right here, this was last week's candle. Well, this week just passed. I was looking for this candle to at least reach the level of this candle over here. So that's why I knew we was getting an upside there. So we just finished that candle there on the weekly. Let me pull up the daily. So on the daily, got the left shoulder, got the head here. Like I said, I'm looking for this candle here, but this is done. So now we got to see what Monday's going to do, a new month, a new week, a new day. Those are the exciting candles. New month, new week, new day. Like I said, ultimately, I was looking for this candle to get to the level of this candle here. So depending on what Monday looks like, we're starting a new week. That candle could possibly continue higher, or we'll go ahead and get rejected. Because when Friday closed, just kept rejecting this area here. So ultimately, I'm looking for this head and shoulders to play out on the daily and the weekly, which signifies a strong move. So if we go back to the day, I recall that I was waiting for price to come back to this gap. And we definitely touched that gap. I wasn't expecting it to come there that early. I actually had a play in, and I was looking for price to come here based on the lower time frame, 15-minute time frame, a smaller head and shoulders inside. So that didn't play out. Price continued down into the gap. Pull some liquidity, and then we got that bounce Thursday, and then this breakout here Friday. So come Monday, want to see what we do here. Will we open here? Will we gap up? Will we gap down? That's ultimately what I'm looking at with Walmart. So hopefully it gaps up, because in order for me to get this account back in, I know one of the stocks I will play will be Walmart, and I'm going to play it to the downside. If I trust and believe in the head and shoulders, the next move is the downside. And the downside meaning down here or here. But if I just put it on the swing low, and that's the daily, we go to the weekly. Ultimately, this is how I expect the head and shoulders to play out for the weekly and the daily, if I even want to go to the daily. But yeah, once again, those are two strong indications that it could play out. Now you see how it looks a little different there on the daily. So before we continue down, like I said, we might get a little pop up to equal these candles or wicks here, and then make our way slowly to the downside. So I could play a put all the way down here. Once again, it's the left shoulder. Right shoulder will be somewhere in this area. This is your neckline. And you're looking to break that neckline or bounce off that neckline. So that's the next move I want to see. Keep in mind, we came down here to the gap, and that was a small entry back up here. That played out. So from here, we're going to come back down to the gap. Should end up breaking through the gap and slowly make our way back down to this level here, 109, 110. And I want to run a put option based on that move coming back down here. If we get up to 120, that's a $10 move down. That should be nice, huge profits. Keep in mind that won't be overnight. That's probably a 2-week move. Looking at the way these candles move, that's probably a 2-week move from the first week in February to the second week in February. And keep in mind that February is always a slow down month, so that makes sense. And then people might get excited because Walmart is going back up, but me, knowing the pattern, it's going back up to create the right shoulder. So that's what I'm looking for Walmart. That head and shoulders still in full effect. I don't see anything different on the daily and the weekly. Everything looks strong. So that'll be one of the plays that I'm going to stay disciplined and focused on to get this account back up. So I might not be playing anything else because the cash is low right now, but I can buy some decent contracts with that last little bit of cash I have left in the account. So, and that way I can get back to my account allocation rules. But we're going to get February back on track. Even though February is a slow month, I think Walmart can dig me out with a nice put based on this move right here. This is the move. Now, let's go ahead and discuss what I might be looking at in the future here, man. If I can get this play out of Walmart here, 2 weeks, nice put going down, get me some liquidity out of that play. I think that'll set me up nice for the stock that I'm looking to do a long call option on. And that, my friends, will be Hood. Ticker symbol HOOD. So right now you're looking at Hood on the weekly. But I want to pull up Hood on the monthly. On the monthly, this is a nice bull flag here. Nice bull flag. Let me give you the visual. For those that like to see the flagpole, I don't too much operate off of that. But there's your pole. Now, if I want to dial in and make these real nice and pretty and sexy, I like my trend lines, you know, smooth and straight. It helps me identify the breakout better. Once again, this is the monthly. So I was saying something to some individuals earlier based off this being the monthly time frame. This is a bull flag downloading. Friday was the last day of the month, and it was also the last week of the month. So this last candle here was critical in decision making on what this thing can do. So let's blow this thing out. If you can't see break of structure, remember I told you to use your line graphs here. All right, so this is the monthly. And it's giving us swing low here, which is this line here. And break of structure, closed candle below that line, break of structure. Now I can go to the weekly, swing low, which was an equal low. And once again, we got break of structure. It's minimal, but technically we did get a candle close on the weekly and on the monthly time frame that broke structure. So that would tell you that we could possibly be going to the downside, either the start of the week or at the end of the start of the week, because we're going into a new month and we're going into a new week. Now, I really wanted this thing to close above and then break structure. That way, come Monday, I can officially say we didn't break structure. But it also could still come back down, but it will be closing on a daily candle versus a weekly or a monthly. So ultimately, this is a play that I'm looking at for a future long call. Since it broke structure, I think it'll still go down even further for the month of February. My fib on it here. Swing low. All right, so further downside for the month of February, I actually like between 79, 80, and 85. I think we get a pullback, continue down this flag here at the weekly, continue down here to 85. 85. And then we start making our way back up. And then when I get confirmation or a breakout of this flag and a retest, I will enter a long call. Because once again, this part is the weekly. But if once that weekly breakout, it's also going to break out on the monthly. And if you just zoom out on your higher time frames, just look at this deal right here. What is this? April, May, June, July, August, big September, October. Now this right here that scared you because look at that long wick down, but it made its way back up. Keep in mind, this is a month. So it wicked all the way down here, but buyer stepped back in and brought it all the way back up. So we can get that same type of energy on this play here. If we get another monthly candle down here, and then we can ride just like this here. We can ride these candles monthly, month after month, stay in the play, month after month, stay in the play, and just get us extraordinary profits. So I'm definitely looking at hood for this play right here. So if Walmart, the game plan, if Walmart can give me a nice put, bring me some liquidity back, which is going to give me some more room to play this hood play and put some money in it, I will be in it with a long leap, trying to mimic this move here for 2026. That's the 2025 move right there. We're going to get another one for 2026. And I'm going to definitely run this play in my other account. That goes without question. I just got to find the right contract in the challenge account to make this work. And I will definitely make it work. But yeah, that's where we at, man. January is in the books. Week 4 is in the books. Your boy's down bad right now. Down, but not out. Lessons learned. We back at it next week, Monday. Be there, be square. Continue to study, continue to chart, continue to look for high probability setups. And once again, if you see a stock out there that'll work for me, put it in the comments, man. Let me check it out. Let me see what I can do with it. But right now, these are going to be my 2 for February, if nothing else don't pop up. Trying to stay disciplined for February because February is a slow month. I don't do a lot of puts, but I think a nice Walmart put would definitely work for me here to get this account back on track, man. Thank y'all for tuning in, man. Once again, like, subscribe, share this out, stay rich and righteous, and let's get to the bag. See y'all on the next update, man. Salute.